Hi everyone, this is Nat. Recently, I have clients asking me whether buying an investment unit for rental income is it still a good investment. So today, right, I'm going to show you two case study that I have done for my clients, and we will see how the calculation will be like if you're going to buy an investment unit just to rent it out and collect income. So does it make sense to you? So the first case study that we were going to do, right, is Treasure at Tampines at the East area, a 3-bedroom, right, at 1.78 million. These are the numbers that we will be using for the calculation later on. So as you can see, right, at Treasure at Tampines, a 3-bedroom, right, will fetch you around average of 4.3, and purchase price of 1.78, right, with an interest rate of 3.1%. You have to pay monthly repayment of 5,700. And just to break down even more, right, these are your interests. So these are the interest that you're actually paying the bank. And for principal, right, we don't take it into account. It's because principal, we are actually paying back to the property. So it's like a forced saving. So interest, right, we are actually paying as an expenses. So let's see how does the calculation works. So for Treasure, right, you're actually having rental of 4,003 per month. It will give you $51,600. And every month, right, we have to pay interest to the bank, and this will fetch you around 41,000. And maintenance fee at $300 per month per year, right, you're actually paying 3,600. And for this unit itself, I have checked on the property tax that if you buy it and you rent it out under non-owner occupy, right, it will be at 5,700. Of course, when you want to rent out a unit, right, you will need to pay agent for the fees, correct? So for agent fee, right, is at $2,300. So after all the calculation, right, you receive this amount, but you have to pay back all this. You are actually having a loss of $1,400. And this amount, I have not still count in wear and tear and also income tax. And let's see our case study 2, which is the west area. Park Amethyst, 3-bedroom at 2.042 million. So average rent of 5,001 and purchase price of 2.42, right? Interest rate of 3.1%. You have to pay $6,500. So these are the interest rate that you will be paying to the bank for every month. So for the calculation, right, rental, you'll be receiving this amount per year, and interest, right, you have to pay this amount. Maintenance fee at $350, so you'll be paying 4,002. And property tax for non-owner occupier for this unit, you'll be paying 7,400. And agent's fee 2,008. So after all the calculation, you are still having a loss of $164 per year just by making the wrong decision on getting a wrong unit for this rental investment. And yeah, so I did not say that buying a investment unit for rental is a wrong choice, but I'm just stating that there are actually a lot of unaccounted data, which is your interest, maintenance fee, property tax, your income tax, agent's fee, and wear and tear. So all this, right, you have to go and calculate on whether it's a right choice to buy a unit to rent it out at this current market itself. A lot of landlords out there, they will think that the rental amount able to cover the monthly mortgage, and this is a profit to them. But actually, right, being a landlord, you have to pay for a lot other more things. So before making this move, please do all your calculation. Yes, and I hope that this video can help you to make a well-informed decision.